Hi, everybody. Thanks for watching. Before we get started, please take a minute to click subscribe to my channel to keep up with all of my latest investing and personal finance content. And please visit the link you see on your screen for a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So, home builder stocks have gotten hammered in the recent market downturn, and it's really not hard to see why. Homes have become increasingly less affordable for Americans over the past year or so. Housing prices are up something like 40% from pre-pandemic levels, even after a recent slight pullback. And mortgage rates more than doubled from where they were just at the beginning of 2022. So it's made home buying, it's made a lot of Americans who want to buy a new house really think twice about their decision. And we just saw earnings yesterday from KB Homes, and they reported a 68% cancellation rate of contracts to buy new homes. That's up from 13% a year ago. And just to kind of put that in perspective, Tyler, the peak of builder cancellation rates in the 2008-2009 crash, which was caused by the mortgage and home building industry essentially, was 47%. So more people are canceling contracts now than were ever in the middle of the financial crisis. But with that in mind, we both agree that there are long-term opportunities for home builders. So what's your favorite builder to take a look at right now?
Sure. So we'll get into the stocks, but I want to give, because you gave some, I would say, grave for some ominous signs coming up for the next couple of quarters and maybe a year or so for home builders. But one thing to keep in perspective is that for all of the bad news that we have seen with home builders, both great financial crisis and what we're seeing today, there have been opportunities in this industry to create long-term value for investors. You know, the Lennars, the DR Hortons of the world, NVR. These are all companies that over very, very long periods of time have steadily outpaced the market. So there are in opportunities here that, even through some of the worst cycles of the housing industry, home building can be an attractive investment to make. So I wanted to get that clear, that we're not just like trying to, dumpster dive into some bad industry that just is super cheap right now. This is a value generating industry over the long haul. One company that I am particularly interested in as of late is Green Brick Partners. They're one of the smaller home builders out there, but what attracts me to them the most is they have done an excellent job, despite being small, doing a very good job of maintaining a very good balance sheet, having excellent underwriting capabilities, and it's an underappreciated part of this industry. Their return on invested capital is one of the highest, despite being smaller. When economies of scale is typically what makes these companies profitable. So you have a low debt, high return on capital from a smaller operator concentrated in the Sun Belt. I get it. That's probably one of the places where we're going to see a bigger slowdown relative to the rest of the nation. But all of that being said, they have shown over the past 5 to 10 years that they are very good at what they do. And I think that there is an opportunity for them to capture market share because they have been able to do that.
Yeah, so the one I'm watching is a company called Dream Finders Homes. It hasn't been public for too long. It hasn't been a home builder for too long. They started about a little over 10 years ago and have just really scaled rapidly. They modeled their business after another home builder that I love, which is NVR. NVR uses a land-light business model. Unlike most home builders, they don't buy a big tract of land and then start to develop houses on it. They buy purchase options, kind of like buying stock options. They buy purchase options on land and don't actually buy any land until there's a contract in place to buy a home. Now, when you have a 68% cancellation rate, I'm not sure how much of an advantage that is, because you're still stuck with the land when someone cancels their contract. But in most cases, that's a pretty big advantage. It means they have to they can build more houses with less capital on their balance sheet and less liquidity and things like that. They have a few things that they're just doing better than a lot of other home builders right now. One, the built for rent market has soared lately, as you know, Tyler, and Dream Finders has partnered with a lot of built for rent builders because they specialize on entry level kind of, homes for first timers, which really fit the built for rent market well. I think homes being sold to these institutional buyers are going to hold up a lot better than they're not going to have a 68% cancellation rate on built for rent projects. Dreamfinders ended the third quarter with about 6,800 homes in backlog. Even if 68% of those are canceled, that should keep them busy till at least mid-2023. I like that they have a much bigger backlog than a lot of their peers. I think the entry-level market itself has a lot of upside over the long term. We've heard numbers like Bank of America came out, I think it was, that said 4 million homes that were short in the U.S. And that's not going to be solved by the companies that build mansions. It's going to be solved by entry-level home builders. So I think there's a lot of long-term potential there. The biggest concern, you mentioned that Green Brick has a fantastic balance sheet. Dreamfinders, that's a weakness. It's not that the balance sheet is terrible. It's just not as strong as its peers. It has a lot more debt than its peers in the home building space. I don't know of any home builders, large home builders that have as much debt relative to their market cap as Dreamfinders does. It's not excessive, but it is something to keep in mind, and it makes them a little more vulnerable to downturns. So if their cancellation rate, when we hear earnings in a few weeks, is anywhere near what KB Homes was, it might be a cause for concern. But I love the company. I think they're executing very well.
We're going to get a little long here, but we both mentioned two smaller ones. But the gold standard in this industry for a long time has NVR.
Yeah.
They, like you said, Dreamfinders, baby NVR. NVR has been the gold standard. And people tend to shy away from it from investment because it always is valued at a premium. But as the time has shown, they have been the best capital allocator. So I'm going to throw a little bonus at the end there. It's like, hey, you hardly go wrong with NVR.
NVR has been one of the best performing stocks in the stock market since they went public. Period. So it's not surprising that Dreamfinders decided to model its business after them. And you mentioned there are a lot of home builders that have just great histories of outperforming. D.R. Horton, I'm standing in a D.R. Horton house right now, has a good history. They're the largest home builder by volume in the country. So there are a bunch, but we named two good small ones. NVR is always a winner, just to kind of agree with Tyler there. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.